Subra, we are starting this session on a rather somber note because we got news of the passing of Rakesh Jhunjhunwala. So I thought it would be good for us to talk about him and our impressions and what we have liked in his life and what he did in his investing and some traits of his unique personality which are really noteworthy. What is your first impression of Rakesh?
When I met Rakesh, we were both students. I was doing my articles in Sharp and Tannen. He was doing his articles with Bansi Mehta, and we had not yet cleared inter. We were still learning maths and stuff like that. We had to write our inter CA. That was the first time that I met him. I didn't know that he's going to become such a big man later on. But yes, even then, whenever we got time, we would be talking about equities. So yes, equities, Rakesh talking about equities, this is, I would say, 1983. Yeah, before November 83, May 83 perhaps, November 83 is when I wrote inter and he also wrote inter. So that is the time I first met him, and he could just talk equities throughout the day. He was a very, it was very clear that he would be doing something in equities. I didn't know he'd become such a big investor. But that's the first impression of Rakesh. I think he was small, big, fat and chubby even then.
And when was the first time you noticed his investment doing really great? Some stock or some bet which he took which really caught your attention and you said, hey, I know this guy, he's doing this.
No, actually it happened in 1986. We spoke, and I think 85 or 86, we both spotted Tata Power. And Tata Power was a 100 rupee share, I think 100 rupee face value. And basically, I bought it because it was paying 7% dividend, which was perhaps slightly less than the bank fixed deposit kind of rate, or a company FD kind of a rate. And and later on I realized I was supposed to be a value investor because I would look at dividends very hard and before I bought. So we both bought. I bought maybe 50 or 100 shares, I don't remember, but he bought 5,000 shares. He had a leverage position. And then I realized, my God. And then, later on in life you realize that he is a guy who could take big, hairy, audacious positions and decisions. That is the money, right? I mean, apart from research and all that, you have to have guts in your position. So I saw him having guts in his position. We were fresh chartered accountants, either writing final or about to write final kind of a thing, 85, 86. That's where I saw. And then, of course, he then became a legend.
He was also a stockbroker, right? But how much of his stockbroking was, something that caught your attention?
Not much, because, we used to see a lot of investors and traders in those days. They would be featured, etc. All that started happening to him, I think, only post 92, 93, and people started noticing him then. Earlier, we used to know that there is this guy called Rakesh Jhunjhunwala who is now a chartered accountant and all that. But there was not so much of press also, right? There was no Twitter and Instagram telling you about these people. So you heard, yaad hai wo Rakesh Jhunjhunwala apne saath tha, he's doing this, he's doing that. You just heard, and you didn't know anything about what position he was taking, etc. I think fame started only in 94, 95. When you heard in the press about the kind of big positions that he took. But I knew in 86 this kind of, I would never have been able to take a leverage position just as a fresh, impossible for me to think. Even today I wouldn't take a leverage position. But he had the guts to take those kind of audacious positions.
So from the beginning, you see that he was more an investor than anything else, and he chose that path of actually being an investor rather than being anything else.
Correct. It was, I would think, a gutsy investor. Investment many people can do. I mean, if you have 100 rupees and you invest 100 rupees, you don't create that kind of wealth. But if you have 100 rupees and you are willing to invest 500 rupees by borrowing 400, that is audacious. But I knew one thing, that his interest payout and all, he would try to make sure that it is within his dividend income and all that. So he was a very responsible leveraged guy. Right, so that was visible from the readings that you did. But yes, he was, I would repeat the word audacious kind of positions that he would take, which very few people had kind of guts to take.
And in the 90s, what are your first impressions of his stock picking? I mean, because you would have had a certain way of looking at stocks and he would have had another way of looking at stocks. Do you think that his stock picking was closer to your generation or my generation, or, you know, probably even a much younger generation? What did you think about the way he looked at stocks?
First of all, when he looked at stocks, he looked at it very deeply. I mean, everybody would say, oh, he went and attended the AGM. I remember one company, Nalco Chemical. This is not National Aluminium. There was another American company called Nalco Chemical. I think he went and attended the AGM in Calcutta and those kind of things. He started those things which you only heard of. I mean, attending a meeting in Bombay was different, but flying all the way to Calcutta to attend meetings and all that, I heard all that was happening. And I think he and even Vallabh Bansali and all, you heard that they really went and did deep, thorough study into the share. I remember something like Supreme Petrochem or Supreme Industries. So much of research was done and all that. I remember, and then when somebody asked me to do research, and I said, what about my fees for doing research? He said, what fees? I told you such a good share, just buy the share and you will benefit much more. Of course, he paid me fees later, but that was such a fantastic thing to say. You just pick a good share and that's it. So a lot of research went into it. So he was one person whom I heard from far. By this time, I was not really in touch with him. He could wear a trader's hat in the morning and an investor's hat in the afternoon. So that kind of a thing, I have not seen too many people in the industry be able to do both. That is one thing which I could see. But a lot of research went into whatever he bought. Even in his early days, that was true.
Do you think his trades also had a research bent to it, or it was based on his gut and something else? That X factor?
Very difficult. But he had that, he would take gutsy decisions, he would take, and brave decisions. And he would tell people, don't copy me. I don't think people heard that. People would just read something and say, oh, Rakesh has bought, so we should buy. Now, if you don't have the same personality, if you don't have the ability to take losses, if you don't know whether you will be able to average more. I remember Lupin went from 700 to 70 to 700. Would you have had the guts like a Rakesh to buy, hold and wait? Or at 70 decide that, okay, at this price there is value, so let me buy. So if you don't know what he was doing, it's very difficult to copy him. So that is something which people should not have done. You could have done and lost money. Because even if you take his portfolio, like very many portfolios which we see, out of say 30-40 shares he bought, some 6 or 7 would give fantastic out of the world kind of returns, compensating for the mistakes of the others. Now if you copied him in parts, you may have got 7 disastrous ideas where he lost money, but he could afford it because he had 7 brilliant ideas.
Which you may not own.
Which you may not own. You may not have bought a Titan saying, oh, it's too expensive, let me not buy. You may not have bought those things in which he actually made. You may not have bought Crisil. Crisil was never cheap. So if you missed Crisil, if you missed Titan and you bought say Midday or something else, you would have lost money. So copying is very difficult. So people could have lost money copying the wrong ideas from him.
There was another angle which I noticed as an investor in many of the common stocks which we bought in the mid-90s, that he would have actually bought to the brim. You know, at once somebody said that he says he buys up to this and then he sells down up to this. But when he is doing this selling down, no, that time if you are in that stock, then you can really get rattled because the valuation will fall one way and then it will settle on again, it may go to a higher place, which happened in many of these companies. But his way of shifting those gears, was like stomach churning. Though the conviction is the same, when you're owning the same stocks, you think that, you know, this is not for you. But whereas for him, it was so easy to just sell down. Like he could sell a stock all the way down and then again buy it after some time. So it was something which you could not even explain, first of all. And the second thing is you could not adapt to it because you are not comfortable with seeing such ups and downs in your stock portfolio. So if you had stocks common, then what I noticed was that it was very difficult for you. Life can be really tough. But what I also noticed was that this was the 90s. 10 years later, there was a completely different dimension to Rakesh Jhunjhunwala because he had learned to hold the stocks like Crisil for long years, long years, and it had gone multiple times. I mean, 100x, probably more. I remember when we first saw it at 125, then it went to stratospheric levels. Similarly, as you mentioned in Lupin, Titan also I think he bought down more than, first he bought up, then it went down. When it was a 70 rupee stock, we were all doing PE ratio calculation. Most of the market was doing this calculation. He was buying, and he was buying openly. This is something which I really admire about the man, because everybody knows that he's buying. He never hid the fact that he bought the stock and that he had high conviction. This was the mid 90s when other investors would be very shy. They won't interact much with the media. They won't interact with the younger investors. People like us would never get a chance to, talk to somebody who has vast experience. It's not like today where somebody can come to your social media handle and talk whatever they like. You can't even reach such investors. At that time, he was so open, and he would talk to young people. I know a lot of my friends who lived in Bombay who would, imbibe what he said, because they could freely interact with him being in the same city. He was accessible to them. And they would come back and say that, he's saying this. And for us, we could connect more to him than with that other set of people who are very, very cagey and not very engaging. Yeah, they were not engaging. So they were like kind of giving us the feeling that we're not going to talk to you guys. Whereas he was directly or indirectly saying that, oh, I talk to anyone. You have got good ideas, come talk to me. That kind of easy-going demeanor, which I really admired about him, and to this day, that is something that sits in my mind as a great quality of Rakesh Jhunjhunwala, because young investors don't get an opportunity to interact with experienced people, and that's what they really want at that time. And most very experienced investors don't think it's worth their time to engaging with very young minds. Whereas he was like a gregarious character and probably spent a lot of time with people who had the privilege of being in Bombay at that time, because that was the only way you could meet up with him, go to where he hangs out, or just find a friend who will take you to him or something like that. And in that decade, he had changed so much, and he had seen huge success in probably a handful of stocks. Correct. In the investment area, and nobody is going to really be able to give an authentic view on the trades, but I'm sure that there were some fantastic trades, because he was obviously buying those great companies using the money he made in the trades. And that's well acknowledged by him in public domain. And to compartmentalize trading and investing was something which most investors struggle with. I have seen this. If you ask me, my investing is way superior to my trading. My trading is rather ordinary. But he had great trading, and then he was able to leverage that into greater investing, which is, in a nutshell, what made the man such an iconic personality. And he was always willing to see ideas ahead of time, go there, park himself. Maybe he would have had a smaller position, and then, like you said, he backed the truck. Lupin is a classic example. They did all those real estate investments, and then it fell all the way down, losing, as you said, 90%. And then he backs his truck somewhere on the way up. Nobody knows when, but around that time, he backs his truck and goes to such a big position that when he is right again, it becomes such a huge success. I mean, that's the only way you can make big money.
In fact, one thing which I heard him say is there is a point in time when a company suddenly becomes more ethical, more moral and all that. Even a Reliance or somebody would have gone through, because when you start and you want to bribe the police inspector or somebody or the banker, you do it. Then you reach a stage and say, I will not do. That is, he calls that the inflection point for the PE to change. The market sees all this and the market says, oh, now it deserves better respect. So he said, at least about Lupin, he said finding that flexion point was a very important thing. So it's true for every company. When you start, you are not worried about corporate governance and mission of the company and vision of the company and all. Only after the company runs for some time, you start realizing, oh, we need all this, we need policies, we need it written down and all. So at some point, when everybody starts respecting that company, saying, oh, this company will not do wrong things, this company, and that way, like many companies reach that stage. If you can spot them at that stage, maybe the market cap is 500 crores, maybe the market will be 400 crores. If you can spot at that stage, take a position and then when it goes to 5,000 crores or 10,000 crores, you make money. He said, my skill is to spot that spot in the entrepreneur's journey.
And take big positions.
Then take a big position. That's guts and skill.
Glory. Absolutely. Yeah, so that is again another quality where you are saying that you are willing to change your perspective on a company before Mr. Market changes that perspective.
Absolutely.
And you are willing to wait till Mr. Market thinks this company is not as bad as I thought it was. Maybe I can have a rethink.
And then the PE changes and very quick to admit his mistakes. He would take a position, didn't like the position, he would exit the position. He would make a loss, but he would exit the position. That is also necessary. There, the trader in him takes over from the investor. Investor says, no, you need to show patience. The trader says, okay, this much and no further. You know, very, very well driven by numbers, saying, okay, so much of loss has happened, this perception is there. I've spoken to people, I don't like it, get out and take a loss.
We saw one very recent exit which he did in a company which has a casino, because he had supposedly high conviction when he bought it, and he held on for reasonable period of time, and then he chose to exit, and it was a large position, and no one was understanding why he was doing that. Many people were saying he has his own reasons. Probably he did, but the way in which he changed his mind and the way in which he got out was very difficult for others who were still carrying that conviction. You see, when you see that such a iconic investor changes his mind in a stock, then you start thinking whether you're making a mistake.
True.
It's very normal for you to feel that way. But he dealt with it as if it's just a normal routine, absolute routine. And he has done it in many companies. And there have been many companies where he has been a great believer in the company, and it turns out that the company completely let him down. And the company completely didn't live up to any of the promise. And you know, you have the A to Z's and Bilka type of companies. But to me, those companies don't even matter, because everybody will make mistakes. What is very critical is how you handle your success. And in that area, I think there's a lot about Rakesh Jhunjhunwala which are worth idolizing, because he handled his successful investments brilliantly. Most of us handle our successful investments ordinarily. Sometimes we let go of success sooner, or sometimes we never let go of success, and we hold on to failure. Many people hold on to failure, whereas he let go of failure and held on to success, which is a very simple statement to make here in a discussion, but very difficult to practice. And he has done it in very high quality companies. So you can't fault a Titan or a Crisil on any ground. And those companies have paid off big time. And you know, they are probably chunk of his wealth creation. And then he goes on to bet on other newer ideas which he hopes can become this. Not all of them are going to become like these companies, but he never stopped trying. As late as trying to create an airline, he had that spirit to go in and buy an insurance company. At a time, you know, Star Life, he bought Star Life, he bought Metro Shoes, and then some gaming companies. There were a number of private companies where he bought a big position. This again was very different from the Rakesh Jhunjhunwala we usually know, who buys and then if it's not okay, he knows he can sell. Here he has become so big that he can't make big bets in small companies in the secondary market. So he chooses to go and make big bets in the private equity space or the venture capital space. Either he buys out an existing investor or he makes a fresh investment in a company, and he makes a real statement with that investment and hangs in there. He is with the company till it goes public and even afterwards, and probably his investments stand to this day. And the kind of expansion in valuation which happens in this phase is actually even bigger than his secondary market success.
Yes, and recently he's taking position in good companies in the Tata Group, he didn't hesitate taking big positions in those companies. He was not looking for PE re-rating and all. That may have happened, that's a different thing. But whether it is taking a position in Tata Power, Tata Motors, etc., and maybe Tata Steel, he took a position in the Tata Group, which is all, I would think, rare, right? I mean, in the 90s, Rakesh was not interested in those things. He was interested in smaller companies which would grow bigger and all. Now, to take a position in something like Tata Power or Tata Motors, which are big companies, he did it and he's made lots of money.
Which brings us to that adaptive skill of an investor to always expand his mind before his portfolio grows to a certain level. See, let's say you are a 1 crore investor. Your mind must be ready to write a 10 crore portfolio or even a 100 crore portfolio. That's something which you think you can acquire when your portfolio goes to 100 crore, the ability to manage a 100 crore portfolio. On the other hand, you have to actually be multiple times ahead of your portfolio in your thinking, so that A, your portfolio goes from here to there using that thinking, and B, when you go there, you know what to do. So you are not caught lagging. So even if your life is cut short, like what has happened in this sad instance, he's probably prepared his portfolio for a much longer.
Possible. He's got a good team for sure. So I think they will step in and take charge. And he was one of the permanent bulls, right, of the Indian market. So he has a team where somebody will come take charge and all that. We don't know what will happen to his business and all that, but I think his own portfolio, somebody will take charge. And
I'm asking about that quality of the mind being ahead. How many investors have you seen like that?
I don't know. I mean, you have to take an overall view in your total investing life and all that. So typically, Rakesh would be a person excessively oriented towards investing.
Okay.
So full time into investing, enjoying it. It was not a job that he was doing. So, you know, whenever I'd say professional investor, he can take a position in real estate or here, he can move his money because that's his profession, and he's very, very devoted to equity. And equity is what, I mean, he was equity. He is the big bull for this generation and for at least few more years. I can't think of anybody else being called big bull. We are both old enough to remember the first big bull was Harshad Mehta.
Yes.
But for many people who were born in the 80s or 90s, even if you're born in the 80s, you wouldn't know Harshad Mehta. You should have been at least 20 years of age to know who's Harshad, you know. So you would have heard of them, but for all the others, it is Rakesh who is the big bull.
No, I have seen both, but even to me, I was not so much impressed by what happened in 92. Whereas what happened in the mid 90s was quite fascinating to me, because I could see that equity research, which was driving all those investment decisions of Rakesh, was top notch. It was not some information based, or it was not based on some speculative urge or anything like that. He had very clear ideas of why he was doing what he was doing, and those were the early days when individual investors were doing that, because 1994 you had people like Jardine Fleming coming into India. But for us to see an individual investor work like an institution in his thought process, and then take his investing to the size of an institution, and then take it to the size of a bigger institution, and all this happening with his expansion of his own personal bandwidth, mental agility, preparedness, the way he took bigger decisions, the way he prepared for a bigger portfolio. These are qualities which, for an individual investor to visibly show to us, I think it was a boon. It was an absolute boon, because nobody gets a chance to see all this. It's all done by others in the private space. Here was a guy who was very, very open, vocal, and very visible, and you could actually understand to some extent why he was doing something and what he was believing in and how he was turning his beliefs into big decisions. The only thing you needed to segregate was whether he was investing or trading. That was the biggest question, and most followers of Rakesh Jhunjhunwala ended up mixing the two things. Whereas it was so simple to segregate his investing and trading, and he had given enough clues, though he had not explicitly said that, which is not expected of him. But still, the investors who followed him wanted to buy those trades because they thought they would get richer by that faster. And it was that greed which actually made you mix up the investments with the trade. Whereas he never succumbed to that greed. He knew what he was doing, which is like fascinating, absolutely fascinating. And it is something which I hope somebody writes about in the future, because the uniqueness of an investor is his ability to handle many things very comfortably, be in a zone of comfort which he wants to be in, and excel at it, enjoy it, and also not lose his focus at any point in time as he gets bigger, and not slip in that urge to excel. And so despite all the other things that happened with his health and many things, I think that he carried that spirit right till the very end, betting big on his investments, being a big believer in the asset class, in companies, in managements, in stories.
Yeah, I mean, taking a position in the Tata Group recently is proof of all this: equities, quality of management, future growth, the fact that Tata Power and Tata Motors are becoming debt free. All this meant he was willing to take his, to use the same word, big, hairy, audacious positions. So that's what made money, because you need the skill to invest and the guts to invest. Both, you need the combination.
When nobody wants to.
When nobody wants to do it. I mean, a lot of professors would have perhaps more skills, but they wouldn't have the guts to take a position. You need that combination to make money, and Rakesh had it.